Hello, everybody, and welcome to our first founder fireside chat with our Arrived Homes team. We'll give everybody a few more minutes to join the virtual room. We would love to hear where you all are tuning in from. I am in Seattle today, a little bit gloomy, but have my black cup of coffee, so I'm happy. Team, where are you all tuning in from today? Kenny, I'll kick it to you first.
Hi, thanks, Corinne, and everyone for joining. I'm in Seattle too, experiencing the same gloomy weather. And yeah, as Corinne mentioned, I'm Kenny Cason. I'm the CTO and co-founder of Arrive. And I actually was born in Missouri, but grew up in Arkansas and actually went to college there as well. And that's where I went on to meet Ryan. Kind of started my career in the U.S. Marine Corps Reserves. I went on to work at Lockheed Martin after graduation. But it was actually during my last couple of years of college that I got kind of my first taste of tech entrepreneurship. And I just remember really loving it, kind of, getting to step outside my role of just being an engineer and get to see all aspects of the business, design, customers, and just really appreciated the challenge and, the space to kind of put your creativity to work. Fast forward 12 years-ish later, and here we are still working together along with our new and good friend, Alejandro. That's me.
Wonderful. Well, I see we have a whole host of folks. We have Connecticut, California, Virginia Beach, Los Angeles. Ale, you're in Paris. Tell us a little bit about Paris right now.
Oh, you're on mute.
There you go. Paris is good. It's cold, as you can see. I'm in an apartment with a Eiffel Tower background. That's a little cliche, but working remote for a couple weeks with my wife and our two kids, and trying to enjoy a little bit of French. I don't know. Yeah, it's been fun.
I love it. And Ryan, you're in Seattle as well. So we have some local folks and then across the globe. So thank you all for joining us today. We're going to go ahead and get started here. The reason we decided to do this founder chat is based off investor feedback. We've gotten a myriad of questions over time, and this was one of the top topics. Oftentimes when we have calls, it's myself or Jake, our business operations manager or head of operations. So he will be in the chat today, filtering all the questions, adding them behind the scenes. We're excited to get it kicked off here. So again, my name is Corinne Headland. My pronouns are she and her. I lead our investor relations team here at Arrived Homes. My goal is to actively listen to our community and bring it back to our team so we can continue to build for and by you. So next, I will kick it over to Ryan.
Great. And I can do a quick intro for myself as well. But I'm Ryan. I'm the CEO and co-founder for Arrived, and provide a quick background here. Based in Seattle today, but grew up in Arkansas. And I've been in Seattle for about 7 years. And most of my career leading up to Arrived, I was previously the CEO of DataRank for almost 10 years, a company that I started with Kenny, and led that company. Through the years, we merged with Simply Measured and Sprout Social, and the combined company IPO'd in 2019, around the time we were starting Arrived. And real estate has been a passion of mine for over a decade. And I was looking back, we actually booked our first Airbnb guests in 2011. So it's been really fun launching the vacation rental product line here at Arrived, and excited to chat with everyone. And I'll hand it over to Ale.
Hey everybody. So Alejandro Chouza, originally from Mexico City, came to the US for college because I was very excited about entrepreneurship and everything going on here. Spent about 6 years in pharmaceutical manufacturing startup. So I started a company to help create active ingredients for different pharma companies. And that time really helped me see that technology and really blending old industries with what's possible today is where I wanted to move to. So I moved to Seattle to work at Microsoft and learn more about the tech industries, worked there for a couple of years. From there, moved over to Uber and spent 5 years at Uber just helping launch new markets, and really fell in love with the ability to take these industries that haven't changed in many years, in that case, paid transportation with taxis and getting around, and really adding a little bit of data and technology to make up a vastly different product that's very exciting. And after 5 years at Uber, I started searching for what new industry I thought that I could help apply some of those same learnings to, and very quickly realized that real estate is one of those areas where you look across the different verticals, whether it's hospitality, ownership of property, buying and selling of homes, and there's so much innovation and really cool stuff happening. And by luck, met Ryan and Kenny, who are extremely sharp, capable, smart guys, and was lucky enough to come about this idea of Arrived, and the concept of really how do you make ownership of property accessible to anybody, independent of time, expertise, financial background, all that good stuff.
Wonderful. Thanks so much, Ale. And Kenny, you got us on the front side with your intro, and we'll get more into it as we go. Did you miss anything, Kenny, on your side before we move forward?
So.
Awesome. We're excited to get rolling. I will say too, Ryan hired me in my first ever tech job back in the day at Sprout Social. And I remember saying, wherever Ryan is where I want to be. And then I had the pleasure of meeting, obviously, Alejandro and working for him by our team and alongside Kenny. So very excited to get started. The few sentences that you each had do not encompass all of your accomplishments over time. I know a lot of people dream of doing what you all have done with your hard work. So excited to get things started here. We'll do a brief agenda just so we're aligned. We're going to do a fun question. This is our first ever one. 3 truths and a lie. So Kenny, Ryan, and Ale put together a couple options for you all. So we're going to drop a poll here shortly. We're going to walk through our current state, what those few data points look like, the history of Arrived, all things, how it came about, why these 3 partnered together, a little bit behind the scenes, and then we'll go into essentially the future of Arrived. And then we always open up a live Q&A session at the end. So feel free to put those in chat. We'll be filtering them through as we go. I'm going to move my mic closer. I noticed we have a few folks having audio issues. We typically recommend an incognito window if that is accessible to you. All right, we're going to go ahead and drop the poll question here. This is a fun one. 1 second here. All right. So which option is not true? One of our founders was an extra in the movie Seabiscuit. One of our founders lived in Japan. One of our founders started a hedge fund in college. And one was DJ Mousetronic. So again, this will be which one you think is the lie. We've got 35% answering. Wow, we've got an engaged crew today. Awesome to see.
I love watching a live tally as well. I wasn't aware it did that.
Me too. Looks like we're sitting at 59% here. So we will give it a few more seconds. I will say we had I want to say team 10 different options. So we filtered through. Our team's quite interesting in what they've done and where they've been. So it's pretty fun to see. All right, we're sitting at 64%, 62 total answers for right now. Let's see what our chat has to say. All right, so we have 31% thinking extra in the movie Seabiscuit, 17% lived in Japan, 21% started a hedge fund in college, and the 32% DJ Mousetronic. So team, Ryan, do you want to kick us with the answer here?
Sure. There might be a wild card in there with the DJ Mousetronic. We might have included 2 lies. I added that as a joke, and it made it into the poll, which is incredible. and kudos to folks for identifying that one. And then my lie was the extra in the movie Seabiscuit. My parents actually make fun of me because I had the opportunity to be an extra in a movie as a kid, which seems like a really fun thing to do. But I declined because I had to go to school today, or that day. Naturally, any kid would choose school over going to be an extra in a movie. So I get made fun of that for by my parents. But unfortunately, that is not a truth. I gave up that opportunity.
Taylor said smart move, and I agree. The reason you chose school is the reason why you're here today. So definitely appreciate you all going through as we let's continue on here. So I will say Arrived has been on an incredible journey in the last 3+ years. I'm keeping an eye on chat. Lots of laughs going. So just since December last year alone, the number of investors on Arrived has grown more than 1,200%. And the number of total investments made on Arrived has grown more than 1,600%. A few short details: we've had 74 million in property value funded. So tens of thousands of Arrived investors are fully funding new properties and investing in building their long-term wealth. We've had 135 million in company financing. Arrived is backed by some world-class investors and partnered with top-tier financial institutions that believe in the mission of democratizing real estate investing. Our team's going to walk through further what that process looked like and who we decided to partner with and why. 33 active markets. I get so excited about this one. Arrived has properties and operations all over the country, helping investors invest remotely in diversified markets. That has been a lot based on investor feedback as well, because we're wanting to understand what makes the most sense for you or where you would be excited about investing. And then 200 properties funded. All Arrived properties are handpicked and individually analyzed by our investment team, ensuring that our investors choose from an exceptional selection of homes. Team, we just celebrated 100 in May of this year in Nashville. So we've had obviously exponential growth during this time. Sorry, I have to click through my slides here. There we go. Arrived, I want to take a little bit of a step back, because obviously we walk through those big high-level metrics that you all see when you hop on our website or we chat through in webinars, so on and so forth. So Arrived was formed in 2019, and then our team spent most of 2020 going through the initial regulatory setup and building out our platform and website. We then sold shares in our first 6 rental properties in March of 2021. And when I say we, this was a very small team at that time, and one that I wasn't even a part of. So it's pretty phenomenal to see all the growth that's taken place. And I will say this is a very broad stroke for all of the incredible work, sleepless nights, copious amounts of coffee, whiteboard sessions, maybe some tequila shots that have taken place in between to celebrate. So today we're going to pull the curtain back to get the inside scoop on how Arrived came to be what it is today. So we're going to kick it off because this is what I think is so cool. And we chatted about it a little bit earlier. Ryan, I would love to hear, and Ale as well, how you all met and what was the deciding factor to partner together.
Yeah. Well, and first of all, jumping into that, I think it's fun to see some of the progress of Arrive that we've made. And I think, a big part of that is everyone who's joining the webinar today. It's been incredible, the response that we've seen, and it's fun to be able to kind of take a look back at what we were thinking about, at that time and how we were getting together. I'll start with, how did I meet Kenny's? Because I did meet Kenny first. We actually met in college, and I was a business and economics major. Kenny was a computer science and math major, and we both happened to be taking Japanese. So that's how our paths crossed in college, and we hit it off. We both had a lot of ideas in terms of what we might want to build, and at that time it was more what we might build as a hobby. I don't think we were really thinking about starting a company together one day, or that we thought that, we'd be here almost 15 years later, having worked together professionally that entire time. But here we are, and fortunate to have met Kenny and yeah, had that opportunity. And Kenny and I met Alejandro as we were working on the idea for Arrived. And I think it's funny, we started grabbing coffee together, and really just talking about the problems that we saw in the space. Kenny and I had seen this opportunity for making real estate investing just more accessible to more people in general, and what really were the problems or things that were keeping people from investing. Things like large down payments and, the time and expertise that's required to go and invest in properties. And we're just, talking through those ideas with Ale, and frankly, working with Ale as informal advisor on helping us think through some of these ideas, and his experience with Uber, and looking at, such large markets like this, how we incorporate that into what we were doing. And over time, the coffees, maybe we met every month, and then it was weeks, and then we were working in shared Google Docs and whiteboards and Slack, and I think it just became obvious that this was, the right team to go help solve this problem for potentially millions of people. And really lucky to meet Alejandro at that formative time and start this company together. Ale, anything to add, or anything you were thinking about as I was, trying to get your input over coffee?
No. You hit it on the head, and I think we were all very aligned to the problem that needed to be solved. And it's been great seeing the reception from clients and investors over this last year, and in that what we thought was a problem really was a problem, and hopefully we're helping a lot of folks meet that need, and yeah, it's been very exciting.
Yeah, I'll just add that it was a very natural fit when we all met each other. So yeah, very, very happy, very grateful.
Wonderful. And what was the coffee shop that you all frequented? I have to ask.
I think it might have been Cherry Street Coffee in downtown Seattle. And then we had a office space nearby that we'd go do some whiteboarding sessions. But yeah, I'm pretty sure it was Cherry Street.
Wonderful. For all those that aren't familiar with Seattle, it's a great coffee shop. There's a few of them spread out throughout the city. So now you know that there's a little piece of Arrived Hearts in one of those coffee shops that you're visiting. So appreciate you all walking through it. And I think it bleeds right into exactly, Ryan, like what you were talking about, and Ale as well, about who we're building for. So can you walk through what the vision and mission of Arrived is, and how this really came to be?
Yeah, and I think we can kind of, because there might be some folks who are new to Arrived on this call as well, and so I can kind of talk about a little bit of what Arrived is also. But I think for us, real estate has been such a phenomenal way to build wealth over many, many years, and for many folks, it's been really a fixture of building wealth for their family. I think what we saw is that for a lot of people, it wasn't something that was easy to access. When you look at the data on who's been able to invest in the stock market and who's been able to invest in rental properties, it's pretty stark. I think more than 60% of people have been able to invest in stocks, and only 7% have been able to invest in rental properties. And our vision was really to change that, to make it such that anyone who wanted to own rental properties could do so. And there's a mix of things that prevent people from investing. Part of it is that home prices have continued to go up, and that means that down payments to even invest in one property are getting well into the six figures. The other is just that people are living a lot more flexibly during their lives. They're moving around a lot more. They might not have the time to figure out where to invest, what properties they want to buy, or to manage all of the operations. And so really what we try to do is build a platform where anyone can invest in rental properties, access this wealth that can be created over years of investing. And the product experience itself is an investment platform where you can sign up, you browse properties like you're browsing, Zillow, and you can buy shares in any of the properties you see, similar to a buy now button on Amazon. And the experience of investing is very easy. We find that people are able to diversify in lots of different properties, different markets, and now into vacation rentals as well. And the vacation rental market is even more stark. Less than 1% of the population have been able to invest and own Airbnbs or vacation rentals in general. And we think Arrive can play a great part in making sure that these economies around real estate are more accessible to more people.
Wonderful. Thanks so much for walking through it. Ryan, it's absolutely exceptional to see, and obviously decreasing that barrier for entry for a space that has been very difficult to enter over time. So appreciate you walking through it. We talk about our whys often, whether it's the reason you do what you do daily or what you choose to pursue in your career. So what is your why behind choosing fractional real estate investing? And Ryan, I'll kick it over to you, but I would love to hear from each of you because obviously there's reasons why based off all your personal experiences and what you've been through. So I think it's always great to walk through.
Yeah, I think for me, it was really, in search of solving this problem for myself, for my family, and how do we access ownership of properties. For us, over a 10-year period, kind of early in my career, I was moving around, it seemed like every couple of years. And for folks who have experience investing in real estate, I think you realize that if you're not going to own that real estate or be in the same place for 5, maybe 10 years or more, it may not make sense to invest in property in that area. And so I was constantly questioning, what does property ownership look like for me? How could I access equity in a way that gave me still flexibility to, be able to move before I knew, where am I going to live long term? And what is my family going to look like over time? And what might our needs be even for the home that we're living in? And so that got me, really excited about just this problem in general, for, solving it for myself and realizing like, wow, this is a problem that more and more people are experiencing. And, it's something that could be really helpful for a lot of people if we're successful. And so that's been, great motivator for me.
Yeah. Would you like me to hop in there too, Corinne?
I was going to say, I saw an active question in the chat that was posed about how many properties folks have invested in. So it's pretty phenomenal to see over time. Folks, some are just getting started and some have diversified their wealth across various properties. So I just wanted to say thank you, Marcin, for posing the question as we go through here. So Kenny, I'll kick it over to you.
Oh, awesome. Yeah, just really kind of piggybacking off what Ryan was saying. I feel like I have a very similar situation of moving a lot in my life, at least once a year, really until I bought the house I live in now, and which I was 30 years old at the time. So I can definitely relate to that. But I think when I think back to growing, where I grew up, I grew up in a pretty humble family. We didn't really have a lot of means, like a lot of people, and I just remember the struggle. I remember kind of firsthand how hard it is to get out of that sort of environment and improve your life. You can work as hard as you want, and sometimes that's not enough, just because maybe the system or environment just isn't in your favor. You got off to a bad start. It takes money to get ahead, go to school, and I just remember being really, really hard. I definitely worked as hard as I can, but a lot of luck along the way, a lot of really awesome people to kind of help push me along, good teachers. I think back to my first job at Lockheed. Had an awesome manager, David Flint, who really got me into investing for my first time. And this was a time when I just fresh out of college, not a lot of money. And he got me into investing, taught me all about 401ks, IRAs. And I remember at the time thinking, wow, this is really complex. But slowly got situated and realized this is something I want to spend more time in and get better at, because I see firsthand how it's improved my life and others. And I think you take that, combine it with the reality of the current the current environment. It's getting harder and harder for people to buy houses. They're becoming out of reach. It's becoming an unobtainable asset, despite being easily one of the most important assets that we can have in your portfolio, even if it's your own home. So I think that problem of how do we get wealth into more people's hands and more accessible to people, it's got to be what it's all about. We have to invest in our core and our all people, and I think that getting to build this platform in a way that's accessible to everyone is, I think, one step of many steps that we're going to have to do as a country if we want to keep taking care of ourselves and make sure wealth doesn't further consolidate into fewer hands. So I really kind of resonate with that aspect of it. And I think that, the Reg A security type has just been amazing in allowing more companies to do this sort of thing. So yeah, it's kind of what it's all about for me. And it's fun to build stuff.
And I'll jump in. I'll be quick, but I think a lot of parallels with both Ryan and Kenny, where at different points in my life, I've had those blockers, whether it was early on, I didn't have the financial capital to go buy a home, then I did, but I didn't have the time or the expertise. I remember buying all these books about real estate investing and rental homes, and it takes so much time and effort, and even understanding the concepts, going from that to having the data to be able to make decisions and all that. And that's where I get real excited, where when you have a company that's doing fractional real estate investing and you're accessing all these tools for how do you pick markets in a very effective way using data, how do you then underwrite homes, and you could do things with a certain professionalism and professional tools that aren't accessible to the individual home. So it's not just about the accessibility financially, but it's the accessibility across many different areas. And so I think this type of model is great. And there's a lot of great companies doing this across the board, both in real estate, in collectibles, and all this. And yeah, I'm a big believer in the general industry of fractionalization.
Wonderful. Thank you three for walking through it and your whys. I know oftentimes when folks are going to just browse our website, we do talk about the history of Arrive, but hearing it from you three and your why and why it's come to be where it is today is phenomenal. So I see quite a few mentions in the chat, a lot about mobile app. We have more to come in that space. So we will hold that for a little bit later, but there was another one in here coming up with a name. Ryan, I would love to hear how you decided on Arrived as a whole, and if anybody has color as well.
Yeah, it's a longer process than I think we would have liked to spend. I remember having a spreadsheet of hundreds and hundreds of names and trying to figure out, what did we think related well to what we're doing. Something that, denoted investing experience and, tangible locations and things like that. So we were testing all of these different names. Actually, Arrived was the third name on the list that we finally came back to. And ultimately from there, it was about, making sure that the trademark is clear and that there's no other businesses using the name. And we decided to go forward with it. But that was the process. No, it wasn't we picked Arrived very clearly from the start, but it was one of the first three names that we came up with and came back to, which I think was funny.
Yeah, it's a big thing, right? It dictates your brand and what people think about it. And it's ironic now, I think of how Arrived is used in all my different sentences that I play back to what we do. So definitely awesome to hear. That was a question that our internal team had asked Ryan very early on. So we have our all hands on Mondays, and Ryan had to walk through it then. And then we've had investors ask about it. So appreciate you walking through it, Ryan. It was one of those heavy hitters that we've had pop up throughout our webinars. So we all know that there's various asset classes when it comes to diversification or looking at different markets, so on and so forth. You have commercial, single family, multifamily, vacation rentals. But Ryan, I would love to hear why you picked single family homes for our first ever product at Arrived.
Yeah. So when we're first starting Arrived, there was really a lot of tailwinds supporting the single family home and rental market. First of all, it was finally getting to a place where it was possible to manage at scale lots of single family homes. Companies like Invitation Homes and American Homes for Rent had proven that they could, develop a program that would allow them to operate, single family rentals at scale. And there was a service provider industry of things like property management and title and escrow and national insurance providers. There was a service provider layer that would allow Arrive to do this in a cost-effective way while adding markets for investors. At the same time, because of the great financial crisis back in 2009, the industry in general had just been far underbuilt. So the supply of homes was far below what was really needed, both for home buyers and for renters. And then at the same time, we're starting to see a shift where people are, buying homes later in their life, and so they're renting for longer for that greater flexibility. And when they're doing so, they're looking to also rent homes. So there's also growth and increase in renter demand for single family homes versus, let's say, something like apartment buildings. So all of those things created, an environment where single family rentals was really attractive as an investment, and we saw it as a great opportunity to build as a foundational product for Arrived over the next decade. Now, as we've grown Arrived, we're also looking at new asset classes. For those who've been following and making investments recently, we've launched vacation rentals as a segment around September of this year, and that is a segment that we are investing in as well. It offers more access to cash flow. It has more seasonality in terms of the returns and some other dynamics to it. But with folks now, after COVID, starting to travel more, it is an area where it's interesting over the years ahead, where there will be great opportunities. And so we're investing, more in that segment. And then we're also looking at other investment segments as well. Where does our investment team, who is incredible and we're very fortunate to have at Arrived, acting as the stewards of all of our clients and the investments that we're making available for people, and we're putting where we're putting our own money because we invest in the properties as well. So really fortunate to have them thinking about what properties, what markets, what asset classes are really going to be, potentially great performers over the years ahead, and we'll look to add those to Arrived as well.
Wonderful. Thanks for walking through it, Ryan. I remember it was like over a year now that when we would release properties, it would take anywhere from 6 to 9 months where folks would see it on the platform. And now it's been streamlined down to every 1 to 2 weeks. And to Ryan's point on vacation rentals, we launched 7 in the month of September alone. I believe we're north of 14 now with another on the way, potentially tomorrow. So hopeful, as you're saying, Ryan, and when we're moving into different asset classes now, obviously being able to go through the mini IPO process with each property is top priority and moving quickly. So appreciate you walking through it, Ryan, and what inception looked like. I'm going to kick this one to you, Kenny, first as we go down the line. So what has been the most rewarding or surprising thing since starting at Arrived? Oops, I think you're on mute. There's our podcast name again.
Oh no, he lost audio.
Come back to Kenny.
While Kenny's working on it, I'll kick it to you first on what's been the most surprising or rewarding since starting at Arrived.
Yeah, I think for me, I'll go with most rewarding. And that has really been the wealth generated for the clients in this short amount of time we've been operating. So in just the last 18 months, we've helped generate around $2 million of wealth between dividends and equity appreciation. And that to me is just very exciting. I know that a lot of folks, when they invest in Arrived, it's because they want to, build that wealth, get closer to financial independence, and really, we're laser focused on being able to deliver on that. We take very seriously our responsibility, our fiduciary duty to drive investment value for investors. And ultimately, if this company is to be successful, it's if we can do that well, right? If we are able to build value for our clients, then in the long term, we should be a very successful company. And to see that come to fruition has been extremely rewarding. Yeah.
Wonderful.
Kenny, are you back?
Am I back?
Yes,
yeah,
you are.
Awesome. Not sure what happened there. I think I'll start with the surprising thing first. I think back to when we bought our first couple of houses, and we were trying to solve how we're going to allow the public to invest in them. And well, I'll just say that was the first step of a lot of learnings when we realized how many legal hurdles there were going to be, regulatory hurdles. We didn't know what Regulation A even was at the time. And, we explored a lot of different options, I'll just say. So in that process, really, I think getting to appreciate the complexities involved was easily the biggest surprise, but I'm very glad we, persisted and overcame. And then as far as the most rewarding, I think it really kind of comes back to, like, at the end of the day, we're trying to build a fun application that everybody can use and enjoy and get value out of. And so I think, like, from the first time until now, when we started receiving customer feedback with people saying, like, hey, they made their first investment ever and received their first dividend payments, and they're excited about that. Like, again, that's what it's all about, is and I think that is extremely fun. I remember, my first investments just in general, and I've been shifting a lot of my own personal investments into Arrived as well, just having fun with it. So it's really kind of cool to see other people, be excited as well. And then I think also just, like, honestly getting to work with the team. We have been very fortunate to build a really awesome, talented team. That this product is super complex, not just from a technical standpoint, but from a regulatory, legal, real estate standpoint. So it takes a lot of things working together well. And to see all that kind of come together is incredible.
Yeah, I would echo that. I think for me, the most rewarding part is just the team that we're able to work with, and how incredible they are, both in their experience, but also what they've been able to deliver for Arrived and for our clients. And it's really across the board. Everyone at Arrived is working so hard, both on the product and engineering side, on our investments team, going out and acquiring and managing these assets on behalf of investors, and everyone in between serving this product. And I think in general, we spend so much time working to be able to spend that time with folks that we really look up to and admire ourselves. Being able to work with these people, I think just that's what makes it all worthwhile as well.
Wonderful. Yeah. Thank you all for walking through it. I know working at Arrive feels like we're continuing to make historic events each and every day. So it is rewarding, exciting, and providing for our clients and building for them. So, well, I want to make sure that we have plenty of time to answer all the questions in chat and make sure your voices are heard. So we're going to jump through these a little bit quicker than we had initially planned for. But Ale, can you walk through or tell us about the fundraising process and perhaps a few folks that we have that have backed Arrived?
Yeah, happy to. So basically, as a new company, it's very important that we go out and really fundraise and bring enough capital so that we could realize this vision that we have and hire an incredible team of very talented folks that could help us, build this great company and invest in the right areas. So we've done so far 2 rounds of fundraising, our seed, which was a $10 million raise, and then our Series A, which was about 25 million. And we're very fortunate that we got a lot of really strong allies across the sectors that we wanted to attract, people with real estate experience that could really help us understand, be well connected on the real estate side. Folks like Spencer Raskoff, the former Zillow CEO, Fred Tuomi, the Invitation Homes former CEO, and then more broadly on the tech side, some really great founders like Jeff Bezos and Mark Benioff. And it was very interesting in that when we'd go out and pitch the concept of Arrived, a lot of these folks that have become very wealthy, they themselves have invested a lot into real estate and built wealth in that manner. And I think they really connected with the idea of having that available to a broader population. And I think sometimes, certain very wealthy folks get a bad name, and, I won't comment on that, but, a lot of times their heart is in the right place of wanting to make sure that there's a level playing field in a lot of ways. And how I like to think about some of our investors is they really, they love that level playing field that we can bring. And yeah, very fortunate to have a lot of folks that have helped us kind of grow in everything from, hey, how do we get, great financing programs for our investors? How do we go out and build great partnerships? Having very strong investors helps us do that. And we're very fortunate in that.
Wonderful. Thanks so much for walking through it, Ollie. And I also think of the Arrived team as a whole. And our goal is obviously instilling trust in our clients and in our investors. And so our team comes from American Homes for Rent, Uber, Sprout Social, a whole host of, and a myriad of different places where we're really marrying traditional tech and traditional real estate for a match made in heaven with Arrived Homes. So appreciate you walking through it all. Our team's been able to grow exponentially and build for you all. I'm going to skip this next question and move right into the future of Arrived. So I would say one of the most exciting parts about Arrived is how we're continually growing and iterating each day while building for and by our investors. So the fun part is that it feels like we're only getting started and scratching the surface because there's so much opportunity in this space. So that said, what are you most excited about in the next year? Kenny, I'm going to kick this one to you first because we've had a lot of mentions of the mobile app. So I'm hoping that we can touch on that.
Yes, exactly. I was going to say, I'll even give a little preview to show it's real. But yes, so the mobile app, we're looking at kind of an early next year launch. It's something we're all pretty excited about here, and I know personally, I'll just speak for us as well. It's actually our first time as entrepreneurs like building a mobile app from scratch and launching it too. So it's been really kind of really fun, and I think we've sort of shifted our philosophy for how we develop as well to you look at the world where everybody's using mobile apps more and more regularly. So we have to be prepared for that. And if you think of like most fintech apps or most modern apps, they all sort of have a mobile application component to them. And so we've kind of taken this idea of mobile first, but not mobile only, because we also understand that we have a lot of investor users who would much prefer using desktop as well. So we'll be building for both mobile and desktop. Technically speaking, it's been really fun just because I think that when you look in like web, just I would say general like application development, you're starting to see a sort of convergence between web application development and mobile application development. And oftentimes that's in the form of technologies where you can more easily share code between mobile and web. And so we made an investment into React and React Native frameworks. So I won't go into too much detail, but it's really enabled us to sort of reuse a lot of that code. So we've been able to build a web app and then take that code and with, I won't say little effort, but less effort than building a native app from scratch, go on and build this mobile app. with relative ease. And I think what's also kind of interesting is we're seeing our front end team as well all show interest in working on the mobile app. So I think the age of, build a web app and then have a whole nother separate team building a mobile app is hopefully, coming to the end, or, coming to an end. So our front end team collectively can both work on the web app as well as a mobile app and, any other sort of client facing apps that we build. Yeah, very exciting. Let me know if there's any more specific questions as well, and I can answer in chat.
Wonderful. Ryan, what are your thoughts here?
Yeah, I think some of the things that we're working on and coming soon are things specifically for investors who've already made investments on Arrived, and improvements to things like the portfolio page and how we're displaying returns, how we're paying dividends. We've been working really hard on some of those elements. And I think, one of the reasons we're excited about that is that investors who've been participating on Arrived have seen their property values grow. They've been receiving, income from dividends, and that's not always immediately clear. And we want to make sure that folks have a better understanding of, what the performance has been, and kind of better idea of that. So updates to the portfolio page. We're currently today, we pay dividends on a quarterly basis. We've been hard at work at shifting that monthly, and something I'm excited about here next year is getting to pay dividends on a monthly basis, so that people can access that sooner. And yeah, in general, just more visibility into how folks' investments are performing.
Wonderful. Thanks so much. Ryan, and I know we had also talked about asset class expansion, so expanding to new asset categories and also expanding our existing ones, so single family homes and vacation rentals as well. So definitely more to come. Extremely excited. The energy's overflowing. So I saw Jeff ask a question about what do you get excited about to wake up in the morning, but I think it's also good to know what keeps you up at night. So we'll do a little bit of rapid fire here. Ryan, I would love to hear from you first, and then we'll popcorn.
Sure. Yeah, in general, I think, especially with the market right now, and I've seen some questions in chat of how do we think about Arrived, in this current market. I think in general, it's just being very conservative as a company. I think that oftentimes for startups, it can be, you can be pulled into, really focusing on growth at the expense of other things. At Arrived, we've always really thought about this as a, decades long journey. So we're thinking over the next 5 years, 10 years, 20 years, what can Arrived be in behalf of, all of our clients? And that means that we are very prudent in terms of the decisions we're making, and thinking about, okay, how do we really evaluate the current market situation and make sure that we're not overpaying for properties that might be at higher price points, that we're not entering markets that may be really hot and appealing from an investor perspective, but that we might worry about the long-term potential. For example, last year, there's a lot of interest in investing in rental homes in Austin, Texas. But we had seen that property values had grown very quickly there, that the rental yields were not very compelling, that property tax in Texas also further made the rental yields more challenging in that market. And so we held off. Even though, we knew that it was a market that people were really interested in owning in, it wasn't one that we felt like was a prudent market to enter at that time. And those are the types of decisions that are hard to make, but that our team across the board are constantly talking about and making. And I think it's really important that we do that and hold ourselves accountable to that as a team, on a weekly basis, because these markets are changing quickly right now as we look at things like the data coming out on inflation, and we look at what the Fed decisions are around interest rates. And so we're constantly looking at data to understand and validate the opinions that we have on the market. And we also try to be really transparent with what the data is that we're looking at on behalf of a client, and what properties that we're buying as a result.
Wonderful. Kenny or Ale, any thoughts before we head into questions from our viewers today?
Yeah, I'll say probably the thing that keeps me up most at night is, simply put, security. Especially as our company's grown, and we're a fintech company, which means we're holding and managing tens of millions of dollars of client dollars, and we got to take that very seriously. So, granted, engineering, one of the core tenets is thinking about security, but I think that's particularly so with our company. So, we've taken a lot of steps to sort of ensure that it's top of mind, starting with making sure we have security KPIs, so that it's something we're always watching and valuing. It's something we talk to, and we have a security channel to call out security issues, disseminate information. We've elected a sort of security officer in the company who helps us kind of dictate our direction and spot weaknesses and points of improvement, such as email verification, two-factor authentication, using Auth0 for our authentication management, which means a little more protection for users' passwords and really important secure information like that. We use code automation such as Terraform to really, I think, automate the actual technological infrastructure of our backend, and we're doing that more and more. And what that means is less room for human error, easier to fix things, easier to tear down, rebuild things if needed, and sort of making that a priority. And other than that, just of course provide trying to follow the up-to-date latest best habits, best principles with security. But it's an ever-moving target, so it requires constant focus.
Wonderful. I will say too, just to wrap us up before we head into questions, Arrived operates as a public benefit corporation. So essentially that means that in addition to our standard corporate governance, Arrived also promotes public benefits in financial inclusion, fair and equitable housing, and job creation. So when we think about what keeps us up at night, it's making sure that we are continually aligning to the stakeholder commitments that we have, whether that's our clients, investors, residents, our community as a whole, and our team. So Kenny, Ryan, Ale, thank you so much for walking through the prepared questions that we've had from investors over time. I would love to kick it right into Q&A from the folks, so we make sure that their voices are heard. So we're gonna start things off here. I know Jake's been threading in the background to make sure we get to these, so I'm gonna go ahead and stop sharing this deck, and we're going to start things off here. So Ryan, the first one I have is for you. And this is from Doug. How many subscribers are currently on the Arrived platform?
Yeah, so we have had over 180,000 people sign up to invest on Arrive. And I think it's been incredible to see the interest. I hope folks who've been investing over the last year have seen that we've gotten better at the consistency with which we've been able to make properties available on the platform. If folks remember, a year ago, it was maybe a month or more in between when we were releasing new properties. We've been able to consistently add those more on a weekly basis now, and we've tried to get better at the communication around that process. And so, yeah, it's been incredible to see the interest, and yeah, but that is the number of investors on the platform today.
Yeah, great question. The next one I have is from Jeff, this one is from, yes, I hear Ryan talk about launching the vacation rental product line. How involved are you with product managers at Arrived as new features and products are developed? Ale, I will kick that one over to you.
Yeah, so I'd say very involved. We're still a small company, and we're about 45 folks. That means all of us are getting pretty involved in a lot of different areas. We have to make sure to hire experts in each vertical that have experience in those areas. For example, in vacation rentals, it was really important to get folks with hospitality experience. But we've gotten very involved because different product lines, I mean, they're a key part of how we plan to expand. And for example, vacation rentals, I mean, it's a very different business than rental homes, right? You're essentially managing these standalone hotels where, you know, the way to succeed and maximize investor returns is very different, right? You've got the whole angle of design and furnishing and knowing what to invest in and what the ROI is on those investments. Then you've got automated pricing, you've got channel management, you've got the local operational logistics. So very different business. I actually worked in hospitality for a while and got a taste of you know, what that hospitality business is. So I've been very involved in that category, for example. But you know, everything is done by complementing and really hiring best-in-class folks that can do that very well. When we started with rental homes, that meant bringing a lot of the American Homes for Rent team over that had experience managing thousands of homes. We get very involved, but you know, when somebody has done that before, you just can ramp so much more quickly. So it's really a blend of both.
Definitely. I know. And the operational efficiencies essentially can make or break a business. So if something would happen on the property and we aren't there, it would make for a poor experience and ultimately not support our investors or our residents in the best way possible. So definitely appreciate you walking through that, Ale. More to come as we continue to expand. I did see one in here from Sean. The inventory on the site is at the lowest I've ever seen. It's getting difficult to stay interested in a ride with this issue. When will we see more stable level of investment opportunities? So Ryan, I think this would be, if you're open to walking through this, like where we were and how we think about this moving forward.
Yeah, no, I think it's a great question, and it ebbs and flows. Maybe let me just talk very quickly about what is our process of finding, buying, and then making available properties for investment, because I think that highlights, you know, why we see different levels of volume. And the other side of that is just that there is a lot of investor interest that we've talked about, and so it's kind of balancing those two things, which can be challenging at times. But right now we're in over 30 markets, both for our rental home product and vacation rental product. We are looking at, you know, something like 50,000 or more individual properties that may be marketed for sale in any given month in those markets. And then we're doing a kind of more of an automated data-based analysis of all of those properties to start. And we're looking for properties that meet a certain criteria, our underwriting criteria or buy box, if you will, before those properties go to human review. And it's a very selective process. And I'd say we are very, very prudent in terms of the pricing and underwriting in these markets, especially right now. So at that point, we go through a human review. We make offers on those properties, and we probably win, you know, maybe 1 out of 10 properties that we make offers on right now. That number at any time kind of ebbs and flows as well, just based on the basket of properties that we're making offers on, the market dynamics, the motivations of the sellers. But ultimately, it's meant for us to be really selective in terms of price. And you know, I mentioned this earlier, but we've really built Arrived for the long term, and we hold ourselves highly accountable to the investment performance of, you know, users on Arrived for all of the properties that we make available. And I think, you know, it would be easy to just go out and buy any property, but we're not doing that. We're really still holding ourselves accountable to, you know, strict underwriting standards, and that means that there might be a week or weeks or a month or more where we don't have as many properties as we might have a previous month. And that could just be that the market dynamics during that period of time and the properties that are available during that time didn't pass the test. And we're okay with that. What we're not okay with is changing our criteria. And so that's why you see the variability. At the same time, you know, we do have a lot of folks who've signed up to invest on Arrived, and we try to work hard to, manage that and make it fair in terms of how we're communicating new properties that are available so that people have the opportunity to come invest. And I think we've gotten a lot better at that this year. I think we've also been able to be more consistent with making properties available. Our legal team has done an incredible job to build a process with the SEC, the U.S. Securities and Exchange Commission, to file each of our batches of properties to where we're averaging, new properties every week right now, which, 18 months ago when we were first getting started was more of a 6 to 9 month process. So to be able to have properties available every week is a huge accomplishment from our legal team. But yeah, that's a bit about, the state of the property volume and how we think about it and how, we're matching those things.
Wonderful. Thanks for walking through it. And I know, Michael, I think you had asked what would each of you describe as the most complicated aspect when creating fractional ownership. And I think Ryan walked through quite a bit of that in terms of providing for our investors in a timely manner. So if there's any other color that you would like us to add there, definitely keep us honest in the chat. We'll keep moving through the questions. One in here from Leslie. Do our renters know what they've rented on Arrived Homes? Do they know their homes' names? And have any of them become investors themselves? Ale, I'm going to kick this one to you.
So yes, when we work with our property management companies, we do tell them to inform the renters that this is a home owned by Arrived and a collective of many investors. We have been getting better at making sure that all of our tenants are offered equity in Arrived properties as well. So we've got a goal that we would love for over 2,000 people in this year to get free equity in homes so that they become first-time property owners. And so, yes, we've been really wanting to connect the dots more from the tenants and the equity. So, yeah.
Wonderful. Yeah, thanks for walking through, Ale. Let us know if anybody needs color there. I did see one with a theme of responsible growth, and I always love these questions. This is from Brandon. And Ryan, I'm going to kick this one to you. How will you maintain the rigor that you have started with as demand to grow faster and faster? I love the focus on quantitative factors and the restrained use of debt. There are some in the chat who are frustrated by the lack of inventory. How will you balance impatient and patient investors? I think it's good to touch on. I know you, Ryan, you just briefly walked through this, but I want to be sure that we touch on Brandon's question as well as we scale and move forward.
Yeah. I mean, I think that it's definitely creating a culture around managing that balance. So we hold ourselves accountable to underwriting standards for all of the properties that we're making offers on. And that depends on, what do we see as a good general underwriting target, so investment return target for a specific market, for a specific property, or an investment product category like vacation rentals versus rental homes. And we use that as, the guiding principle for what investments we're making. At the same time, we're looking at more of the kind of macroeconomic data to inform, in general, are there new asset types that we should be looking at? Are there new markets that we should be looking at? And that's also helped inform some of the new things that people have probably seen. As a good example, as interest rates have gone up, that has made it more compelling to invest in either markets or assets that have higher available cash flow. That's a good reason that a product line like vacation rentals, which have a bit more seasonality but higher income potential, have been something that we wanted to invest in and that we really worked on developing this year. So it's been fun to bring that product to market. At the same time, we've also added different properties in areas of the country that do offer a higher rent to purchase price for properties or a higher effective cap rate that could also offer better cash flow in this current interest rate environment. And then the last thing I'll say is that we also provide a variety of different investment options at any given time. So things like different levels of leverage or debt that's on the property, different types of market dynamics, and different product types or asset types for investors. And so that aspect really does give investors the freedom to choose, so they can decide, do they want to invest in A or B, and what investment thesis, if you will, really resonates most with them. And I think that freedom of choice is really a big part of the platform for Arrived as well, and letting investors be able to make some of those decisions on their own.
Definitely. And Ryan, Brandon had said, I'm more like Warren Buffett and don't think we should be swinging at every pitch. And I think Arrived very much feels the same way, of being very picky when it comes to what strategic approaches we choose as a business moving forward. So definitely appreciate the question, Brandon. I'm still seeing a ton of questions around mobile apps, so I can feel all the excitement coming through the screen. Kenny, I know you mentioned early 2023. Can you walk through what strategic approach you have for how you not troubleshoot the app, but make sure that when it's released to the public, that it is in the best shape possible?
Yeah, I'll try to touch to some of that. First off, I'm super excited that everybody's questioning about the mobile app, really helping reinforce this investment as well. But some of the things we're doing, first off, I mentioned earlier about some of the reusability of code from our web app. So some of that battle-hardened testing that the web app has gotten from being used over the years, we get to inherit a lot of that. And so I think there's a technological aspect to this. There's also, just from a testing standpoint, like we test internally. I think I mentioned somewhere in the chat of my most recent 20, 30, I don't even know, purchases. Most of them have been on the mobile app. So we've been testing that internally. We have actually just recently opened a pretty closed private beta with a group of people as well. So we're going to collect that round of feedback, and we plan on continually expanding that outwards, taking the feedback in, and then further improving the app. So we're going to keep doing that quality process until we feel that it's up to par. And of course, we have technical tools to monitor bugs, error crashes, and things like that, and then report that information to us so that we can quickly edit it. And we also have some mechanisms in place so that we can quickly get app releases out, like live updates, what we call over-the-air updates, so that we don't have to wait for 2 weeks for Apple's approval on minor updates like you might have to do if you're building a native app. And so we've it's a pretty multi-pronged technique, but really built off of just a quality first look at things.
Definitely. So appreciate you walking through it, Kenny. I like to think of Arrived as like we're all on this minivan driving together, and we spend a lot of time in that HOV lane. We understand our lanes, but something that was so cool the other day was we as a company got to sit down and go through all different aspects of the mobile app with Kenny and the whole entire product team, which was absolutely phenomenal. So more to come in that space. Appreciate you walking through it, Kenny, and obviously all the excitement that we're seeing in chat around it. So very excited. I did see one flow in here from Todd. I believe I know Todd, so I'm glad to see you in chat today. At this point, what other real estate platforms, if any, would you consider competition? And how are you differentiating yourself in the market? So obviously, Ryan, there's a myriad of different platforms and ways to diversify wealth. So what would you define as our biggest differentiator?
Yeah, I think that's a great question. Even within real estate, I think the idea of making it easy to invest and own real estate or rental properties is one that resonates with a lot of people, because it's something that's a part of so many people's investment plan. And we have seen other companies similar to Arrived also created as well. I think some of the fun ones to see have even been in other companies like in Dubai or Australia, creating similar product lines. But within here in the US so far, I think how we think about Arrived and the point of difference is really around the product and investing experience. So far, we've created Arrived in a way where people have the ability to pick and choose, which properties they're investing in. So it mirrors the economics and the returns of investing directly into the real estate directly into a home, much like it might if you, oh, I think the fire alarm in my building here is going off.
I can jump in a little bit here, going off what Ryan's saying. Essentially, there are always opportunity if you're looking to invest in traditional real estate, whether that be your own single-family home, so on and so forth. But what we're really trying to do at Arrived is mirror what you would see while doing that. So one of the ways we'll be doing that in the future is with those monthly returns versus quarterly to match what you would receive like rental income if you had your own property. So definitely more coming down the pipeline as we move forward. So let us know if we need any more color there. We're happy to walk back through it with you all, and everybody on the line staying on longer than normal today. So we not only appreciate our 3 founders, but everybody in chat as well. Ale, I'm going to kick this next one to you. You chatted briefly on obviously like the fundraising process. More specifically, has Jeff Bezos investment in Arrive played any factor in the way the platform to invest has been structured?
That's a good question. So I'd say that his investment, along with other folks, have really opened the doors to a lot of connections, partnerships, et cetera, that have helped different parts of the business. For example, financing is one of the toughest things to do in our business. Essentially, we are getting, non-collateralized loans that don't have anybody backing the loan, and getting a good rate for that loan is a very difficult thing, especially in today's environment. Thanks to the investors we've had, we've gotten introduced to certain bank lenders that allow us to get deals that we otherwise could not have had. So I'd say it's very surprising where our investors end up helping our product, but we do see that percolate across the different offerings we have.
Wonderful. Thanks for walking through it. I was going in and out of mute, so I'm not delaying on purpose. I did see another one in here from Brandon, and this is along the lines of financial literacy and education, which is definitely always top of mind and something that we're thinking about daily to ensure our investors are well educated or those learning in the space. So the question from Brandon, and Ale, I'm going to punt this one to you. Would Arrived be open to partnering with financial literacy nonprofit education partners working with youth and disadvantaged groups? There's a second part to this. Would Arrive founders record a video of encouragement for young students trying to start their life on the best foundation by using fractional real estate? Oops, you're on mute.
So yes, absolutely on both of those sides. What I'd say is if you have any organization that you work with or believe we could be a good fit with, let us know. We do work with a couple of organizations that help certain groups get access to property ownership and understand what options they have, including Arrive, but other things. So it's definitely something that's top of mind for us. On the first question around financial literacy, I think that we, from the beginning, have wanted to invest a lot into really helping educate folks, not just about real estate investing, but how to think about saving and planning for their financial future, of which Arrived, if we're honest, is going to play a small role, right? When folks come to us and say like, hey, I'm saving up money, should I put this all into Arrived? I invariably say no, right? You need to diversify. You need to diversify across asset classes. Arrive should be one part of the puzzle that's going to help you get to financial independence. So, we feel very passionate about Arrive as a way for people to learn about, different topics such as, savings, investment, et cetera. But by no means are we the one fits all solution. And for that, we hope to keep pumping out a lot of content to help our users, learn more if there are areas that they know less about. For example, our CFO, Joel, he is a tax fiend. He loves the topic of taxes and how to optimize taxes, et cetera. Corinne right now is working with him on a webinar to help people understand, what are the different tools you could apply in your own life that have nothing to do with Arrived and real estate investing. And again, we see that as part of our mission because we very much care about the financial well-being of our clients, whether it's through our products or through other avenues, other content, other tools, tips.
Definitely. Thanks for walking through it, Ale. And we did have a Taxes 101 webinar with Joel, our CFO, and then our head of ops, Jake, who's in the chat today a couple weeks ago. We're going to have more content in the future. I will say, too, that Joel's been able to give all of his energy and education to his kids. And I hope in my next life that I can be like them when it comes to it. So we want to bring that to all of you because it's incredibly valuable. We even have internal lunch and learns because Joel packs a wealth of knowledge that has helped all of us grow exponentially. So I did see, Ryan, I'm glad you're safe and back. Perfect. I did see one last question in here. I know Jake is asked if we missed any questions, so keep us honest in the chat. I'm going to kick this one to you, Ryan. What's the best, worst decision that Arrived has made in the last year? Oops, Ryan, I don't think your audio is working.
Oh no, it's not working.
I thought he was just thinking on that really hard question.
I know. In the meantime, Ale, I'm gonna kick that one over to you in terms of strategy. And Ryan, if you're
try
back.
now. It's a tough question. I don't actually have one that comes to mind. So I was just talking about how I wasn't sure what the best worst decision might be. But yeah, I didn't have a good answer on that one. Ale, Kenny, Corinne, any ideas or?
I've got a good one.
Oh,
So
nice.
I think what we should have done is at the beginning in 2020, we should have acquired like hundreds of homes before the increase in prices, so a couple of homes we released a couple months ago, like the Eagle that we had bought over a year ago before the prices increased. And, we were able to release those to the market and have our investors capture that baked in appreciation. I wish we had bought like 200 more of those so that we could really pass that wealth building on to clients. But hindsight 2020, yeah.
2021.
Hindsight 2021.
For me, it's probably just some scaling issues or some technical things I would have done slightly differently, knowing that hundreds of thousands or millions of requests were going to come to the webpage and bring us down. So good decisions on getting things out there, but scale top of mind now.
Definitely. It's always good to walk through it. I know we do whiteboarding sessions around like hits, misses, and next times around whether it's a campaign or things that we're doing internally. So even to your point that you all made about what could have been better, it's a massive kudos for everything that has been achieved in the last year alone with the growth that we've seen over time. So rather exceptional. I believe we got to all the questions in the chat, but keep me honest here if I missed any. I know Jake's been cruising behind the scenes, getting those all threaded. But before we close our virtual doors, any closing remarks that you all have before we tip off for today?
Yeah, I'll just say a quick thank you. Thank you, Corinne, for leading the conversation, and Jake for keeping us up to speed on questions, and then everyone for joining. It's been really fun having this conversation with all of you and seeing the questions from everyone. And we really appreciate you investing alongside us in Arrived and being part of this journey with us. Reach out anytime if we can answer questions for you. And thanks again for jumping on with us.
Wonderful. I'm seeing some great feedback in the chat. Leslie, thank you for the kind words. Noah, Denise, Michael, Sean, awesome to hear and have you all today. Ryan, Kenny, Alejandro, thank you so much for making time, especially all of your, it's late in the evening in Paris and you went over today. So we definitely appreciate the time. For everybody on the line, we so appreciate you. We're building for and by you, and to see an active chat is life-giving. If there's any topics that you would like to see in the future, please feel free to email support@arrivedhomes.com, or if you have any questions or anything that we'd like to chat about. We also have a chat widget in the bottom right-hand corner of our platform where our team is living on the other side of that to help you. We do have quite a few other webinars coming up in the next couple of days. So tomorrow we will be walking through a new market, the Great Smoky Mountains. We may or may not be releasing during that webinar. So you didn't hear that here, but I would definitely tune in if you are available. Kwao, our Director of New Investment Opportunities, will be leading that alongside myself. And then traditional webinar Friday. Monday will be State of the Market with Cameron Wu, our VP of Investments. So be sure to check those out coming up. I know Jake's linking them all in the chat, but thank you again for your time today. And as always, any and all feedback we are here for. Have a great day.